My name is Samar Karananaika. I am the Chief Commercial Officer here at RedOwl. Today, we're going to introduce a series of podcasts with some leading Chief Financial Officers across Australia and New Zealand to talk about insights on financial governance, real-time governance, and how our companies within our countries today are being run by our CFOs. For our first episode, we have Eason Ramanathan, who is the Chief Financial Officer of WACO Kwikform. Eason, welcome.
Thank you. Thanks for that.
And thank you for taking the time to join us and share some of your insights. Before we start, can you give us a little bit of a background on yourself, how you became a CFO, and a little bit of a snapshot of your career?
Started with Ernst & Young in Chartered Accounting, not on the audit side, actually on the internal audit governance sort of side and risk management services side. Then moved to Australia in Sydney. Then moved to Caltex, to the internal audit function there. And then after that, ended up in the UK and worked for basically the company that owned McVitie's, which is, their version of Arnott's. Yes. And basically, did some internal audit governance work there. But then also started my first foray into, I suppose, more like a commercial finance role and, really starting to work with sales and marketing and own a set of products. Then around that time, the GFC hit, came back to Australia, and then, funny enough, started working at Arnott's around the sales finance function, FP&A, and then the marketing teams, which is great. New product development, it's always very exciting. And then from there, basically then moved into my first real sort of senior roles with Schneider Electric, which is really around that, I suppose, industrial services sort of space, as well as, energy management, electrical channel, the mechanical contractors, the data center channel and data center builders and the like. So really got some great exposure there. And just from a career progression point of view, moved to Johnson Controls, and then the opportunity with WACO Kwikform came up.
Wow, that's an interesting career trajectory. Yep. And so when you set off to study accounting, you didn't sort of say, I want to become a CFO, but your path was through auditing and then into commercial finance. And you've gone from making biscuits to, Schneider Electric is a very complicated business, right? It's an industrial business. Yeah. And now WACO Kwikform. Yeah. So tell us a little bit about WACO Kwikform. What do they do?
Yeah, so WACO Kwikform is pretty much a scaffolding formwork company within Australia, right, and New Zealand. It's got 3 different businesses. WACO Kwikform being, or Kwikform being the main one in Australia around that industrial and commercial sort of scaffolding work and formwork. Right. New Zealand's the equivalent in terms of the United Scaffolding Group. And then, then you've got the Star Residential business, which is really focused on that residential scaffolding piece.
Got it. And how many employees, roughly?
It can vary because we've got a lot of casual employees, but fundamentally there's about 300 permanent employees, and then we can get up to anywhere to 700 to 1,000 casual employees, depending on how many projects we've got on the go.
Got it. And that in itself will become quite a challenge, I guess, from a CFO standpoint, in terms of managing schedules, rosters, knowing who gets paid when, for which project.
Absolutely. But, you've got to deal with award systems, enterprise bargaining systems and stuff like that from a payroll point of view. You've also got subcontractors as well. So managing those as well becomes pretty key.
And so kind of leads me to the next question. What are, say, your top 2 or 3 key challenges? And you mentioned that, you wanted to go from, assurance and audit to being a commercial partner to the business.
Yeah, 100%.
So, not empower, but more enable the business to grow or go to market or, create new products and take to market quicker or whatever it is. Today, in your role as CFO for WACO Kwikform, what are your, top 2 or 3, key challenges as a CFO with that sort of commercial lens on?
I suppose from a challenges point of view, if I was to put in the context of WACO Kwikform, definitely, labor management is and cost effectiveness around labor. That's pretty key for us. Yes. We are, got a lot of labor on that point of view. Inventory management as well. Yep. That's one challenge there. And then information systems and data in order to, I suppose, get any sort of optimization, at least from what we can see in our organization. Yeah, definitely leveraging data better is what we want to be able to do.
Well, and increasingly we start to see that within the CFO's remit in an organization, increasingly, AI, and we'll touch on AI in a little bit, but, AI, data, machine learning, all that kind of strategic use of data is falling within the remit of the CFO, because they then become the enabler for the rest of the business to be able to draw insights to make management decisions.
Yeah.
Is that how you see it?
Yeah, I mean, obviously, depending on the size of organization, some have like, your CIOs and stuff like that. I mean, we're very much a medium-sized, Australia, New Zealand sort of business. So from that point of view, that generally has to fall under somewhere. So in that sense, it's IT falls under me. So, but throughout my career and the like, definitely in order to get efficiencies, not only from a financial operations point of view, but just in terms of how finance can contribute to the overall organization, getting better information, to be able to make decision making is so vital and key in terms of any sort of success.
And so with data, and you were talking about data foundations and getting data right.
Correct.
That kind of manifests itself in different ways for different contexts.
Yes.
For you today, what does that mean in terms of what it will enable you to do as a business?
Yeah. So, I mean, we're not dissimilar to, other businesses out there. We've got a lot of disparate sort of, separate systems. Don't necessarily talk to each other.
Yep.
We are trying to get them to flow better. But at the same time, we're probably not going to be dissimilar in terms of just our journey, just trying to build that data lake of sorts, and basically have that all the systems moving their data into a central repository, but at the same time being able to have each one of those systems as bespoke, and then adding to, either leverage the data in and out of there, but then also contribute to it as well.
And, people have this saying that data has gravity, and, ultimately your underlying data, even your accounting data or your ERP data, it gives you insights on, what to do next, for example. And so with that in mind, around financial processes, for example, if you just give us a little bit of an insight in terms of what are the challenges that you see.
Every month, our billings runs off, our branches, and we run a branch system.
Yep.
Basically, then contract administrators in those branches being able to look at timesheets, look at what the contracts are saying, being able to effectively build up their claim sheets in terms of, what work that's been done. Does it actually meet the criteria for the claims? And then being able to invoice accordingly, which, as you can imagine, from a P&L management point of view, you want to be able to manage your margin adequately from there. Where we have seen struggles is that, people, or we would have branches where costs would definitely be there, and the branches, one way or the other, would basically miss. Basically being able to capture those hours and build it. Variation management's another one, and the like. So, and then also the other thing is, you've got our timesheeting system, you've got our ERP system, but then we've also got our OH&S system, which also handles our sign-off in terms of once you've erected a scaffold, it's complete, and you sign off with the customer that this is complete, and that enables you to actually do the billing. So really what the problem we're trying to solve at the moment is, is basically get, those job completion sort of reports then automatically flowing through to then trigger, to build out a claim sheet effectively. That then drives an invoice. Or likewise, not have one of our branches invoice a customer without those works actually been completed.
Yeah, kind of pulling all of that together. Even if it's at the front end from a billing your customer perspective, versus billing your suppliers or your contractors, not having full visibility and transparency to be able to bill at the right time or pay at the right time, will have implications on working capital, for example.
Yeah, absolutely. Yeah, 100%. If you don't invoice a customer, that's problematic. As I was talking with you asked about our employees, we're mostly run off employees, which generally means we're paying them in the month.
Yes.
If we were heavily based towards subcontractors, at least you get the 30 days, but that's not the case in terms of that. So, getting invoicing and getting that cash in as soon as possible. And you're already paying your employees within the current month.
Yeah.
So you're already 30 days behind. So you don't want to be going even further behind from that perspective.
And so that then kind of has another correlation to, budgeting and forecasting in terms of, actuals versus budget from a operating expense perspective, right? And so, for example, if you've allocated to a business unit or a line of business owner X amount of dollars for a period of time, and, it will be periodic that you measure it against either quarterly or annually, right? The impact of not having reasonably tight controls on working capital and trying to stem leakage would allow you to allocate more dynamically, I guess, budgets for, parts of the business that perhaps have overspent. And, tapping into areas of the business that have underspent.
Yeah, correct. I mean, we're the construction game, so invariably, you can have 10 contracts go great, and one sort of, can challenge the profitability on the others, let alone even just being held up in payments. In large ones, especially if you go into commercial disputes in the construction game, it was fairly common. I mean, construction generally doesn't have high margins, so from that end, you really got to make sure that you manage your cash properly.
Switching gears slightly, Eason, so just in terms of the role of the CFO, and, it was really insightful in terms of sharing your sort of journey, from being a student, studying accounting all the way through to, quite a trajectory of a career, I guess, in terms of, doing different things, different industries and so on.
Absolutely.
What do you think the role of the CFO is envisioned for the future in this era of AI now starting to come into play?
I mean, if you look at just even finance teams going forward, before you'd kind of have your traditional pyramid, so to speak, where you'd have a whole bunch of graduates, they're doing your basic, entries, reconciliations and stuff like that. However, now systems are becoming so much more better now. So, so basically your finance teams are getting smaller and stuff like that. So really the people you do have, how can you extract the best use out of them in terms of not only just running finance, but in terms of, how they interact with the business, because that's what they have to become. And other challenges for the CFO of things going forward is agentic AI and, a few other buzzwords. But, the reality is it's being able to harness technology to do a lot of work for you such that, you're not wasting time trying to compile data together, but at the same time analyze it. I mean, if like a tool and stuff like that comes back to you and says, hey, I've already checked off all these different things. And we'll take a RedOwl example, like from that point of view, it's checked the bank, it's checked the ABN, everything checks out. Then, I've got the comfort that, we can actually pay this.
And, just on the whole topic of AI, a lot of people, popularly state that, AI is going to take over human jobs kind of thing, and the robots are coming and all that kind of stuff. Sounds like a Star Wars movie. But the saying should be that people or businesses or functions of business that leverage AI will replace people, functions, and companies that don't leverage AI kind of thing. But so, and that whole notion of a accounting student having to, know the basics and, the rudimentary deterministic tasks of accounting will now need to focus on more critical thought, critical problem solving, and become an almost fast track to becoming that commercial business partner versus a quasi administrative financial function. Is that a fair statement?
Yeah, that's definitely a fair statement. The accounting profession in general is, how do you get that base knowledge and fundamental understandings? Obviously, a few people my age would probably say, well, you started with your reconciliations and doing, that's standard sort of stuff when you started out. Now there's probably less of those roles. My mom's also an accountant. When she started, it was sort of like, they used the ledger books and the T ledgers, and basically, the computer came in and there was like, was it Lotus 1-3 or SuperCalc, was first version of Excel, and it's kind of like, wow, how's that going to replace the T books? And it just does. And the same thing there, it was like, oh, that's going to get rid of a whole bunch of bookkeepers. Yeah, it might have, but it sort of also changed and reframed and created new opportunities from that point of view, because you didn't have, your commercial analysts. So where people are doing the T ledgers and stuff like that, they're now doing commercial. Same thing. I actually think it's going to create another set of jobs. Yes, they need to understand the fundamentals, but at the same time, such is the way that I suppose technology is going, is that do they? That's the other thing. Can they rely on, call it ChatGPT or whatever it is, to be able to kind of support them in terms of how they can actually do that.
Yeah, which is actually a nice little segue into RedOwl and what we do and so on and so forth. And one critical principle that we have within 2 or 3 principles, which we can touch on later, is this concept of human in the loop.
Yeah.
And whilst AI will do all of the underlying baseline foundational, process work that, will free up humans to be able to do more critical thinking.
Yeah.
The human will always be the final arbiter of ensuring that if there is some level of risk that they prescribe to the AI to be able to go do, then the human gets invoked in the loop to be able to make a call. Turning to RedOwl, you've chosen RedOwl and we're implementing RedOwl. Give us an insight in terms of, why, what was interesting about RedOwl for you? What was your thought process?
Yeah.
I'm sure you would have looked at some other platforms out there as well.
Yeah, absolutely.
Yeah, if you can give us some insight.
Yeah, so I think choice of RedOwl was in terms of the ability to check, do live governance, if that's the way to say it.
We call it real-time.
Real-time governance, there you go. Yeah, so basically doing the real-time governance, I think was pretty significant for me. I think the other thing I liked about RedOwl was, you guys didn't seem like you were just resting on, hey, we've just set up an AP automation tool. It's like, we've got this pathway to actually add on and build on it as well. And, definitely talking with other providers when I was looking around for an AP automation solution, it seemed like they were going to fundamentally stay in their lanes to a degree. But, in terms of what you guys are trying to do is just trying to add, get that pathway on not only improving the tool you've got. So, the thing I liked about it was, you've got something that checks your ABN to your company name, to the bank account. That's that sort of check I didn't see too many AP automation tools actually offering. So that I view as like a huge plus in terms of making sure that the governance is correct. Then from an automation point of view, we've got lots of different types of sort of branches that are out there, and each one sort of has its own set of vendor accounts, because we basically run our own P&Ls and balance sheets for each one of those branches. So it's fundamentally then just trying to get the best use within the branch of that complexity there, which you guys can also handle as well.
Wow, that's awesome. And we have this kind of notion of pre-transactional intelligence.
Yes.
And so, whenever a transaction, whether it be an invoice or a PO, is going either way, whether it be to a customer or to a supplier, before that transaction is actually executed, the CFO within the organization can have a look at your policies, have a look at your structured and unstructured data to be able to say and provide the platform with the intelligence to be able to say, give us a score out of 10. Is this transaction 8 out of 10? If it's 8 out of 10 or above, let it go through to the keeper.
Yeah.
As in process it. Or if it's under 8, then flag it to a human in the loop in one of your team to be able to then do what they need to do.
Yeah.
And so there are so many things that come into play here that that we refer to as multi-point validation. So if it's due diligence, to your point about supplier, there's ESG, there's modern slavery, there's all kinds of things that companies and CFOs are, on the hook for. So let's kind of switch gears to the concept of governance and real-time governance. You're absolutely dependent on a platform to be able to kind of interrogate the transaction.
Yep.
But then when it does flag, hey, what does this mean from a governance and compliance perspective? So if you could share with us, how do you do governance today? And what are the challenges around compliance?
Yeah, because we've got a branch system,
Yeah.
a fair bit of the governance is decentralized.
Yes.
And that's where either I'm looking to either tighten it or try and centralize it. But fundamentally, the biggest thing that it can't impact is scalability and or a branch's ability to scale as well as to operate in terms of efficiency. Let's say governance does mean it does slow down things,
Yes.
but at the same time, it doesn't necessarily have to.
There's this notion of episodic reporting or governance or periodic, where, if it's if regulated industry, if it's APRA, or if it's, if you're in the telecom industry, it's critical infrastructure requirements, etc. And every industry has its own nuances outside of a broad brush ASIC type thing.
Yeah.
And it's also, the certification needs to be on a periodic basis, whether it's quarterly, if it's annual or whatever. And to be able to do that on a real-time basis means that or your board or your stakeholders or your investors know that, okay, this is happening as it happens versus after the fact.
I mean, we've got subcontractors. With scaffolding, you've got individuals that are carrying anywhere from 2 to 5 tons a day at heights on construction sites. So it's high risk work.
Yes.
So having subcontractors as well. So, if, having a system that kind of says, well, actually somebody's engaged with a subcontractor and we're paying this invoice, but, being able to check that, hey, hang on, with our ONH&S system, kind of like if it's able to actually talk and say, hey, actually, we do have a certification for the subcontractors. Those are like important checks. Absolutely. That'll 100%. The directors of the company will be more than happy with that sort of stuff.
When you start to get into directorial liability and all that kind of stuff, it's a huge, huge topic, right?
Yeah.
To be able to have that as you go. Fascinating discussion.
Yeah.
And really appreciate you sharing, your thoughts as a CFO, and in particular, as we continue to build a community of CFOs, and we provide the younger CFOs who are on this journey, an opportunity to kind of learn from folks like you as well. So I really appreciate it. Thank you.
No, thanks for the opportunity. Looking forward to the journey with RedOwl.
Awesome. Thanks, Eason. Cheers.